Canadian fintech company Propel Holdings has reported what it calls record first quarter results. Those results topped estimates as well. Investors are cheering the company's boost to its dividend as well, as we look at Propel Holdings shares up nearly 10% in the market today. For more, we're joined by Clive Kinross. He joins us in studio right now. Must be nice to look at your stock up 10% today.
Yeah, that was a really nice view. A lot better than the last time I was here, that's for sure.
Your company calls these record numbers, and when I look at them, I certainly see some big double-digit gains. Revenue up 44% to $140 million approximately. Adjusted EBITDA up 37%. Profit up 79%. What has driven these numbers? Was there an acquisition in here at all that drove some of those gains?
Yeah, there was an acquisition in Q4. If you recall correctly, we acquired Quid Market with big ambitions of becoming the leading fintech lender for underserved consumers in the UK. It's driving a small portion of the revenues and profitability growth, but nonetheless it is driving that. And at the time, we said that growth of that business would be approximately 40% this year. One of the outstanding achievements is we're exceeding that. After our first full quarter, that growth appears to be ahead of schedule. And if anything, we expect the growth trajectory over there to increase on a go-forward basis. But broadly speaking, Paul, what's generating this growth is strong demand from consumers, from underbanked and underserved consumers in all the jurisdictions that we operate, coupled with outstanding credit performance. If you were to look at really what's going on in the sector and look at the New York Federal Reserve did a survey recently. Turndowns from big banks and credit unions is 21.5%, the highest it's been, from about 18.5% a year ago. And then if you look in turn at what the demand from consumers is, roughly 27% of the US population is going to apply for credit or anticipates applying for credit over the next 12 months compared to 23% a year ago. So you've got strong demand coupled with big banks and credit unions turning down these consumers. So lots of consumers who might otherwise qualify for credit from banks and credit unions aren't getting that credit. They're dropping into our segment of the market, in turn increasing our addressable market. And not only is our addressable market increasing, but it's increasing with better credit quality consumers. So in many respects, it's a Goldilocks scenario for us.
What kind of relationship does your business have with the rate of unemployment in a market? We've seen unemployment rise significantly in Canada over the past year or 18 months, much less so in the United States, where it's been essentially stable. What's the relationship between the pace of unemployment and your company's ability to serve customers?
It's a very key macroeconomic indicator that we look at. You're absolutely right. 6.7% unemployment here in Canada, 4.2 in the US, 4.4 in the UK. If anything, US job numbers came out a week or so ago, and we saw that the April numbers were ahead of plan. So really robust employment situation in the US, and more so, if you look at our segment of the market, even fuller employment, where you look at where those jobs came from, services industry, transportation, hospitality, healthcare. Those are all industries where our workers work. So really full employment over there. And if you look at the open jobs relative to the number of people looking, that ratio is also one of the highest. So notwithstanding some of the noise that we're hearing and the uncertainty driven largely by tariffs, the fundamentals of our business are exceptionally robust, doing brilliantly, and almost at the halfway point of Q2 now. We could only say that the same trends that we're seeing are going on across the board. Canada's a little bit different, obviously with a higher unemployment rate, even though inflation's a little bit cooler in this country than the US. So we're operating a little bit more prudently in Canada than the UK and the US. Notwithstanding that, was a record performance in the UK, both at the top line, in Canada, both at the top line and bottom line as well.
The company's brands are Fora Credit, Credit Fresh, Money Key, Quid Market, which you've just mentioned in the UK, and a lending as a service product line as well. Talk to us about the difference of those brands and how you reach your customers.
Yeah, so the different brands are for the different jurisdictions that we operate in.
Right.
In the US, it's Money Key and Credit Fresh. The main difference of those brands is the consumer that we're targeting. Money Key tends to be a consumer with a slightly more bruised credit profile, so the APRs tend to be higher than Credit Fresh and the loan amounts lower. Quid Markets, the UK, Canada is where we have Fora, and then we have lending as a service either through our relationship with Pathward Bank or through our Credit Fresh brand. And we target these consumers through different channels, different exclusive partnerships. As an example, we recently partnered with Coho here in Canada. We're their exclusive lender to provide unsecured loans to their consumers. That's an example. We have lots of organic and partnership market opportunities in all the markets that we operate, driving that
You reach
growth.
your clients, I assume, digitally, do you? On social media and other digital channels?
It's a full fintech business. Everything's fully integrated in-house with our 650 employees across 3 jurisdictions. Our marketing team does an outstanding job using multiple digital channels and more traditional channels like direct mail, organic marketing, SEO, PPC to go on and reach those customers.
Do you see yourself, does the company see itself as a consolidator here? Are there more acquisitions coming?
This first acquisition has been phenomenal. You know, for us to turn around and, you know, grow our revenues by 44% to just under $140 million and grow our profits 79% to $23.5 million. Let me be clear, the vast majority of that has come through organic growth, but certainly QuidMarket has been a tremendous success so far. We spent 2 years analyzing that deal. It was outstanding, and certainly the industry that we operate in is a global industry. There's lots of outstanding competitors, or should I say companies in different jurisdictions that we're speaking to all the time. We've proven that we know how to do these acquisitions, and certainly we will continue our growth through a combination of greenfield startups in different jurisdictions as well as select acquisitions where they make sense.
Thank you for coming in, Clive.
Thanks so much for having me.
Clive Kinross is CEO of Propel Holdings.